This is the Asia Trade. I'm Shery in Gyeongju, South Korea for the APEC summit as we await President Trump's crucial meeting today with China's Xi Jinping. The leaders of the world's biggest economy set to formalize a trade truce that could see some tariffs and export restrictions rolled back. That follows agreements on a $350 billion deal with South Korea, capping months of tense negotiations.
And I'm Avril Hong in Singapore. Our top stories.
We haven't made a decision about December, and we're going to be looking at the data that we have, how that affects the outlook and the balance of risks, and I'll just say that.
The Fed chair rattles markets by downplaying the chances of a December rate cut following today's 25 basis point reduction, indicating strong divisions about the next move. Plus, Meta and Microsoft shares fall in late trade as plans for aggressive spending on their AI ambitions worry investors, but Alphabet gaining on a sales beat driven by its cloud unit. Shery?
Avril, we're expecting President Xi Jinping to arrive here in South Korea. He'll be arriving in the city of Busan, just half an hour ride from where we are here in Gyeongju. Now, this is his first trip to South Korea in 11 years, and it's also going to be the first in-person meeting with President Trump since 2019. We're expecting a trade truce between the two largest economies of the world, perhaps something along the lines of purchase agreements on soybeans, perhaps something around critical minerals. But President Trump said that he'd be open to providing China with access to Nvidia's Blackwell AI processor as part of a trade deal. That would be a major concession. Of course, it's really been about those concessions coming from Washington, right? And perhaps also in the form of that trade deal with South Korea. The stakes were very high for President Lee Jae-myung, but we just heard that that trade deal has been finalized, and there were major tweaks to the composition of that $350 billion U.S. investment deal. Take a listen to what President Trump had to say.
We had a tremendous meeting today with South Korea. I think the meeting a lot was determined, very much determined, and we made our deal. We pretty much finalized a trade deal, and we discussed some other things having to do with national security, etc. And I think we came to a conclusion on a lot of very important items.
Now think about as well the optics for Trump in this deal making across his Asia tour while the U.S. government is in shutdown. So he also needs these deals. But we are, of course, tracking these developments out of the Fed. A couple of surprises, including the divisions within policymakers, the ending of quantitative tightening coming a couple of months than some had anticipated. But of course, the big one, Powell pushing back against those December rate cut expectations, saying it's far from a foregone conclusion. Have a listen.
Continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
So take a look at how the repricing is underway in U.S. futures. We, of course, have been seeing this run up earlier in the week following the U.S.-China trade data and the optimism that we could achieve something in South Korea. But this pushback from Powell is prompting that repricing. Never mind that Nvidia is crossing $5 trillion in market cap. Also perhaps not helping the performance of Meta in the post-earnings. Take a look at how we're set up for the Asia session. The ASX 200 is perhaps pulling back a little bit, getting a head start on the weakness. And don't forget, this Fed pushback could prompt complications for Asia central banks that are perhaps grappling with the currency weakness. We also have the Bank of Japan decision that's due today, not expected to move, but Ueda-san might just take this opportunity to set things up for a December rate hike. Let's get more on the fallout from the Fed decision with our senior editor for markets and Bloomberg opinion columnist John Authers. So John, to some, these surprises were unexpected.
Yeah.
Does the caution we're seeing with the Fed make sense to you?
Yes. I mean, I'm also actually somewhat pleasantly surprised that that Powell was as emphatic as he was. But he, the clip you showed was exactly the right one to say in as many words, and he was actually checking his script as he said it. This is not a foregone conclusion, far from it. When the markets were pricing it as a foregone conclusion, it was literally regarded as a 100% chance that they would cut again. Showed that there really was some concern to push back on market expectations. Now, if you look at the bond market, which is obviously very directly related to this, then there was a sharp move in the 2-year yield. But overall, I think the main message I got from the last couple of hours of trading today on Wall Street was that it's still AI that matters, and the immense excitement around the investment it's creating that matters far more than low interest rates. The S&P was literally flat to 2 decimal points, despite what really was quite a major negative shock on interest rates. So it does show that there's a degree of optimism there, that it's not just dependent on easy financial conditions.
And some negative shocks when it comes to some earnings as well, especially from big tech and how much they have to spend in order to set up this AI boom. What is important for the markets right now? Because, of course, we have the Fed shock, but also we're trying to understand what's happening with this AI rally.
Yes, that in many ways could be more important. I think there's not much point speculating about exactly what Xi and Trump are going to be able to agree in the next matter of hours. But I think a deal in which Nvidia is allowed to sell Blackwell chips to China probably is already priced in. So there are probably greater downside than upside risks from that. And of the big three, the three giant tech companies that have just reported, 2 were regarded very negatively and one very positively. So I would imagine that there are going to be some pretty big headwinds for Wall Street at the opening. The big question remains, as it has become ever clearer for quite a while, is twofold. Firstly, are we going to get a return on these massive investments in AI? And secondly, can we afford them at all when it comes to power for them? Energy inflation has begun to rise a little here in the States. If it rises much more, are local people going to start being unhappy about all the demands on electricity that local data centers are putting on them? If that leads to higher electricity prices for people, is that going to create a problem? So I think that's, at this point, probably an even bigger issue than tariffs, or frankly than monetary policy, which is not far away from its resting place. But very few people outside the Trump administration think it's wildly out of kilter with where it should be.
Yeah, you raise a good point, John, about perhaps the underappreciated risk from AI and the immense energy that these data centers require. But as we continue tracking these developments out of the Fed, how do you think this is going to perhaps complicate things for Asia central banks, including the BOJ, whose decision we're expecting today, but perhaps more of the focus is going to be on the commentary from Ueda-san?
Right. I think that it would be amazing if the BOJ actually moved rates at this point, and that seemed to be possible before Takaichi won her election. But but yes, you're quite right. Exactly what Ueda-san chooses to say now that we do know that we have our new premier will be very interesting, and it gets harder for him, arguably, to stay easy if the Fed is getting more hawkish. I think Takaichi does require, and anybody who's trying to fight inflation in Japan does require, a somewhat stronger yen. And if the Fed is more hawkish than we thought, that is going to be a material extra pressure on the BOJ to hike. But I agree with you. I don't know exactly. Again, there's not much point speculating at this late hour about how Ueda-san is going to try to navigate that. But it certainly creates more pressure on him to hike. Even though he has a prime minister who is on record as saying that it would be stupid to hike rates. That's not an easy position for him.
Perhaps the U.S. can offer some relief for Governor Ueda with Secretary Bessent's comments also on the BOJ being allowed to do its job. But I do wonder how much the central banks are really pricing in the latest coming from the trade negotiations and the potential impact on the global economy. Because now we're seeing some indications with major economies across Asia that we might secure trade deals with a certain level of tariffs.
Yes, I think that let's look at that two ways. I am still quite a strong skeptic about the trade deals that are deals with scare quotes around them that are being reached at the moment, because they are still pretty sketchy and they can be revoked very easily. But just look at what's going on with the USMCA is a vast, carefully signed and negotiated treaty between the US, Mexico, and Canada, and that hasn't stopped all kinds of things happening this year. So I would be careful about exactly how far how much importance we attach to deals. Although obviously, the more that leaders can try to go with a sort of positive ambiance, the better. I think one of the more interesting meetings we've had today, which I wasn't expecting to be terribly interesting, was from the Bank of Canada, who have a very serious problem, which in many ways is caused by tariffs. If there's any country that's really going to get hurt by tariffs from the US, it is Canada. It is having a bad effect on their economy, but they don't think that they can cut rates much further than they already have. And Tiff Macklem complained about the tariff situation in his comments about their decision. Now that is an interesting one. Some kind of a deal there, and the Canadian could really make a difference to Canadian monetary policy.
Especially given how Trump has said they're suspending trade talks with the Canadians after that ad. John, always great to chat. Thank you so much for your insight. Senior editor for markets and Bloomberg opinion columnist John Authers. Now, coming up on the Asia trade, Samsung's chip unit expected to report a solid profit rise driven by the AI infrastructure boom. We'll break those numbers for you later this hour.
Plus, we are live at the Barclays Asia Forum here in Singapore for exclusive interviews with our Global Research Chair and Asia Pacific CEO, as well as Blackstone's Global Vice Chair. Plus, a number of other newsmakers, including Oaktree's Howard Marks and former central bankers Philip Lowe, Lael Brainard, and Haruhiko Kuroda. It is a stellar lineup. Keep it here with us. Much more ahead. This is Bloomberg.
It's another big day for diplomacy on the sidelines of the APEC summit. Topping the agenda is the highly anticipated meeting between Presidents Trump and Xi Jinping that's scheduled to happen at 11 a.m. local time. South Korea is also expected to hold more bilateral meetings a day after finalizing a trade deal with Washington. Meetings with Canada, New Zealand, Australia, and Japan are also on the schedule this Thursday. For more, let's bring in University of Tokyo Graduate School of Public Policy Professor Kazuto Suzuki. Professor, great to have you with us here in Gyeongju.
Well, thanks for inviting me.
How incredible that we're actually meeting in a random city instead of back in Tokyo. But let's talk a little bit about how we're setting up for the conversations between President Trump and President Xi Jinping.
Sure.
Because now President Trump has come back from ASEAN, has come back from Japan, has now said that they have a trade deal with South Korea.
Yeah.
How strong a position is he in order to negotiate with President Xi?
Well, I think this is the bilateral context and the multilateral context. Bilaterally, still, Mr. Trump is in a weaker position because of the lack of the solid supply chain resilience on the rare earth mineral. But on the other hand, multilaterally, Mr. Xi doesn't have the allies, but now Mr. Trump showing that there are lots of potential that he can, diversify the supply chain on the rare earth minerals. So I think if Mr. Xi think that, Mr. Trump is now expanding its ally network and then, creating an opportunity for diversifying, then Mr. Xi will be in a less stronger position. But who knows?
I just find this very interesting that the Trump administration seems to be doing sort of a U-turn from what the Biden administration was doing, which was emphasizing allies in order to rein in China. And now you had hit all your allies, and now you're trying to make friends again.
Yeah. Well, indeed. I think he understands that the United States is not perfect. The United States is no longer in a position of strength, and he needs the allies and, the much wider global supply chain support. So he made a deal with Australia, Malaysia, and then Japan and South Korea. So I think this is a U-turn of Mr. Trump to come back to the alliance.
We were just speaking to our Bloomberg columnist, John Authors, and he was saying, I'm very cautious about calling these deals because we really don't have a lot of details and whether or not we're actually going to see follow through on them. What do you think?
Well, I think, the deal with Japan is somewhat similar, but I think one of the most important thing is that there is a commitment to this. 2 days ago, there was a big meeting with Mr. Trump and the Japanese businessman and making all this commitment to invest in the United States. So I think even though there are no details, the most important thing is that they are both sides are committed to this deal. And as long as there is a willingness to have the deal to happen and to make the relationship better with the United States and getting an access to the U.S. market, I think things work.
With the warm relationship that President Trump showcased with Prime Minister Takaichi, we thought the bar was set very high for President Lee Jae-myung. But now we're getting more details, and actually perhaps more details on that U.S. investment fund than even with the Japan deal. $150 billion in shipbuilding, $200 billion in cash, $20 billion only capped annually in investments, which of course the Bank of Korea had said that's sort of the maximum limit in order not to upset the currency markets.
Right.
Has President Trump given, how much of the concessions has President Trump given in order to get some sort of agreements with its allies before meeting President Xi Jinping? I mean, I do wonder about how much of an upper hand he had going into the China meeting.
Mm-hmm. Well, I think he has made not much concessions. I think at the end of the day, this is a deal between the tariff and the investment. So it is not bigger concessions that he had to make in order to get those investments. Because at the end of the day, the tariff is still a threat to both Japan and South Korea. And I think also at the end of the day, the Japan and South Korea are the security allies. So, the U.S. commitment is absolutely necessary for that. So I think this re-establishment of the relationship with allies will create a much more boost for Mr. Trump with regard to the negotiation with Mr. Xi. But I think, there is this understanding that Mr. Trump and Mr. Xi are separating the geopolitical deal to the geoeconomic deal, which is about rare earth mineral, the soybeans, etc. These tariff negotiation, the economic trade negotiation is not linked and packaged with a security matter. That's probably one of the aspects that will be interesting to see today's meeting.
Which I feel is sort of going back to what the U.S. strategy has always been when it comes to its relationships with the world. However, when it comes to the potential concession on geoeconomics, especially tech, President Trump has talked about being open to providing China access to Nvidia's very advanced Blackwell's AI processors. How big would that be?
Well, this will be big, but I think to to a certain extent, I think there is a separation of the, well, there is a clear line divided between the Blackwell H20 and the the more advanced chip for the AI, designed for the AI GPU. So I think there's an understanding that what is the red line for the security matters and what is the acceptable line for the economy matters. So there are certain concessions that Mr. Trump has to make, but there are some sort of the last line of defense is will be kept.
On China's rare earth restrictions, I was speaking to the SK Group chairman, Chey Tae-won, yesterday, and he talked about how this issue is just a matter of pricing because there are rare earths elsewhere in the world. It's just a matter of getting them to the market. Is this a real threat? He didn't seem to think this was a big deal, that time would solve this.
Well, I think it is, we need to think of the supply of the rare earth from the material and the processing. I think the problem is that, yes, you can find the rare earth everywhere in the world, but the problem is that China is dominating in processing, the processing layer. China is making all this, because the processing of the rare earth mineral creates a lot of, the toxic waste. And, China has much less and looser restriction on the industrial waste. So it is very difficult and it is more costly if you do that in, major industrial countries. So we need to find the other supply chain route of where we can do the processing. So I think Mr. Chey may be a little bit optimistic about this, and I think there must be some more investment in the processing side.
Rare earths, of course, are a long-term strategy for President Xi Jinping, where he has his natural resources, the manufacturing power of his country. Is there a risk that, given President Trump's negotiating style, where he wants short-term results, that he might give away too much?
Yes, there is a possibility, but I think it's not just Mr. Xi; it's an entire Chinese regime investing in this dominance in the rare earths, not just rare earths, but solar panel, wind turbine. There are many things that China dominates in the global market, and I think this is a strategic processes that that China has trying to dominate a certain growth area, such as the renewable energy, and I think you can't do that only for the short-term interest. So I think United States has to rethink of its strategy and create more resilience in the long term.
Kazuto Suzuki, really good to see you here in Gyeongju, APEC Summit, of course. I'll see you back in Tokyo, sure. University of Tokyo Graduate School of Public Policy professor. We have more to come on the Asia Trade. This is Bloomberg.
Let's take a look at the Treasury's curve after Powell's pushback. We saw yields rising across the board and to the highest level since at least early June. For the moment, Treasuries pointing to further declines. The dollar following an initial spike easing off a little. More ahead on the Asia Trade. This is Bloomberg. Now, following on from OpenAI's restructuring, which makes it a company for profit, we're since hearing from Reuters reporting that OpenAI aims for an IPO filing next year and eyeing a listing in the year after that could value the company up to around $1 trillion. Of course, in terms of tech names, we're watching the reaction function following U.S. mega cap earnings and how that plays out in the Asia session, following on from Powell's pushback on a December rate cut, not a foregone conclusion. And of course, here in Singapore, the annual Barclays Asia Forum is also underway. It brings together business leaders and policymakers. Let's cross over to the event where Bloomberg TV anchor and editor-at-large Haslinda Amin is with our first guest. Has?
Well, that's right. Joining us is Ajay Rajadhyaksha, Chair of Global Research at Barclays. Ajay, good to have you with us. First off, a reaction to what Avril just mentioned about OpenAI filing next year IPO in 27. This is what, a $500 billion valuation company.
So, my first reaction is that we had the Fed meeting yesterday, and no one cares. Your first question is about OpenAI. But it's true. It tells you how much the balance of power macroeconomically has shifted to the hyperscalers, to AI spend. And gosh, these numbers are very, very, very large. The listed names, the Metas, the Googles, they're all spending lots and lots of money as well. But they have existing earnings models that throw off an enormous amount of cash flow. The challenge for the OpenAIs, the Anthropics of the world will be that their business models so far have not been monetized. And yet markets
It has to be profitable at some point, correct?
So if you look at most forecasts, right now for the next 3 to 4 years, these companies are still expected to lose a lot of money. But I think there is the belief, probably correctly, that there is going to be a winner takes all. And the company that wins out in the end ends up being multiples of even a $500 billion valuation, and so you place a bunch of call options.
Ajay, Avril, also in the line sitting here, just what are your thoughts? I mean, you raised the point that nobody seems to care about the Fed, although we do have our colleague John Authers earlier, our Bloomberg Opinion columnist, highlighting how when it comes to AI and the build-out when it comes to data centers, maybe the underappreciated risk is what we're seeing in the energy inflation potentially. Do you think that is something that we should be watching more closely, longer-term inflation risk into next year, against the backdrop of these tariffs?
So I do think you should be watching the energy side. Absolutely. You should be watching it. I do not think it's a constraint for next year. Hassan and I were just talking before I came on air. And the fact is that the United States is in the early stages of the single biggest industrial investment cycle since the Second World War. And I'm including the 2000 to 2002 telecom build-out. This is significantly bigger. Power is not going to be a constraint for 2026. But if you start talking about 2027, 2028, then you start to get to a point where you worry about whether the US has enough power to meet data center needs. Yes.
Turning to the tech space, the AI space, talks about it being a bubble. There are concerns. If you take a look at how the stocks are doing right now, right, all the Max 7, there are some concerns about where they go from here. Yet you see the likes of Nvidia now. Yeah. A $5 trillion company.
Yeah.
How do you square that?
So I know what you're getting at. Has Meta reported today, post-market, it's down 7%. The earnings were fine. It seems like markets are getting, for the first time, a little bit worried about the extent of AI spend. And the numbers that are being tossed around, Mark Zuckerberg saying, it's okay if I overspend by a couple of $100 billion, not million, couple of $100 billion. The risk is still in not spending enough. Larry Page of Google coming out and saying, I would rather go bankrupt than lose this race. So none of these guys are going to back away. And for the most part, if you look at Oracle, if you look at CoreWeave, markets are largely still rewarding AI spend. I don't think that changes for the first half of 26 at least.
So the models are intact, right?
Yeah.
Nvidia says the latest model, the latest chip would generate $500 billion. We had, Hynix saying that all the chips for 2026 are all sold out. So that remains intact, meaning at some point the rally will continue.
The way that the rally doesn't continue, honestly, is if something happens on rare earth elements. I know it sounds bizarre, you're switching from one to the other, but that's the one big choke point that the West, including the West's AI build-out has. Absent that, I don't think you're going to have AI collapse under the weight of its own valuations. We had a DeepSeek moment, and markets didn't flinch at all. We had the single biggest reordering of global trade in April that we've had in many decades, and markets bounced back massively. I don't think there's a lot of things that throw us off course for the next 3 months.
Of course, AI tech, the big thing. We can't ignore the Fed, right? That 25 basis point cut expected, that pushback for December. a bit unexpected.
Yes, so the Schmidt dissent was a surprise. The Miran dissent was not a surprise. So the dovish dissent was as expected. The hawkish dissent was a bit of a surprise. The Fed did give something else, though. Remember, they said that they would stop QT a little bit earlier than Chair Powell had said. I think, look, they're still going to go in December, I think. What they're trying to do is keep optionality open. You know, there's something funny. Just before the September meeting, the 2-10s yield curve was exactly where it is right now. So the Fed's cut 50 basis points. We've had a couple of months pass, and the curve has not moved at all. Now, either markets have gotten phenomenally successful at forecasting the Fed, or markets believe that the Fed is following a preset path. And I think the Fed doesn't especially like that. They probably want to keep some of their options open. That's it.
Ajay, that is a useful reminder. The curve, does that mean that we are not headed for further repricing? And perhaps that puts in question the durability of this dollar bounce that we're seeing?
The way I would phrase it is you're not going to see a lot more weakness in the dollar. Now, one of the biggest drivers of dollar strength usually tends to be money-seeking U.S. financial assets. Well, that's not gone away. I mean, honestly, if you need exposure to AI, you're not going to the European equity markets. You're coming to the United States. That's number one. Number two is you notice that in the last 9 months, the part of the bond market that has done extremely well, the country that has done the best is actually the long end of the US yield curve. 30-year US yields are down 80 to 90 basis points. 30-year JGBs are flat. 30-year gilt yields are flat. 30-year OATs have not moved very much. But, and the reason for that is because tariff revenues count, and at least for 25 and 26, the United States almost alone has a somewhat better fiscal picture, which also is pulling some more money into the US bond market in this particular case. But ultimately, look, if you come out and tell me that the Fed is going to cut 50 basis points for the next 3 meetings, I take back everything I said. The dollar is going for a toss. Absent that, I think the dollar holds in here.
I'm glad you raised JGBs because we do have a BOJ decision today. What do you make of the fiscal profile of Japan under the Takaichi administration and how that might influence Japanese government bonds?
So, right. I'm not as worried as I was 3 to 4 months ago, where both the JGB market and the gilt market seem to moving almost in lockstep, even though the two countries have very little to do with each other on the fiscal side. The markets are paying close attention to the fact that fiscal profiles in Japan, the United Kingdom, the US, and France are really not where they should be. But I think Takaichi-san is going to be able to get this fiscal program through. You notice that this government seems to be backing off, pressuring the Bank of Japan on the rate hike cycle. For example, the finance minister came out and said, yes, while we believe that the Bank of Japan should go hand in hand with economic policy of the administration, we think that they will do the right thing themselves. That pressure has eased off. And if that were not the case, I think the JGB market would be more worried. This she will be able to push through.
Ajay, before we let you go, just a question on the Fed. Is 4, or rather is 3 the new 2?
On inflation.
Yes.
The Fed's never going to come out and say, but it's, you ask hard questions. So the fact of the matter is the Fed has missed its 2% inflation target for 42 straight months. And seems to, even in its own forecast, it's not getting to 2% for a long time. And like you said, they are cutting, and they're going to continue to cut. So they won't come out and say, we are happy with 3%. The explicit target will not, you can't change that until you get to 2 first. But wink, wink, nod, nod, they're going to be okay with it.
So it's yes, Ajay, thank you. Ajay Rajadhyaksha, Chairman of Global Research at Barclays. Of course, Avril, we have a stellar lineup throughout the morning. You have to keep watching where we are right now, coming to you live from the Barclays Asia Forum. Handing it back to you.
Oh, Haas, we will be staying tuned for all that. Thanks so much. Much more ahead, as Haas just alluded to, from the Barclays Asia Forum in Singapore. We'll speak exclusively with the Asia Pacific CEO in the next hour. Plus, stay tuned for conversations with Blackstone, Oaktree's Howard Marks, and former BOJ Governor Haruhiko Kuroda. We have more ahead on the Asia trade. This is Bloomberg. Meta and Microsoft under pressure in late trade after forecasting bigger spending on AI infrastructure. But investors are liking Alphabet's strong sales from its cloud unit as AI startups demand more compute. We also saw Nvidia gain in the regular session, becoming the first $5 trillion company. Let's bring in Bloomberg Intelligence Global Head of Research, Mandeep Singh. So, Mandeep, good to see you. First off, let's talk about these earnings. We are seeing perhaps a bit of a mixed bag in terms of the investor reaction to how much these companies are spending. What are your takeaways?
Sure. So I think the divergence that we've been talking about in terms of Google and Microsoft showing the higher ROI on AI spend with their cloud businesses is becoming more and more apparent. And in the case of Meta, the fact that they are talking about raising the capex for next year without having anything substantial to show for it in terms of ROI is probably the reason why you are seeing a negative stock reaction. But with that being said, I mean, both Microsoft and Google and even Meta called out being supply constrained at least till first half of 2026. So there is no doubt that compute demand is taking off in terms of more use cases, more inferencing demand, and all these companies want more compute. I mean, it's just an ROI question at this point of time, and Google and Microsoft are doing a much better job when it comes to ROI.
What's next for these companies as they continue to spend, and when can they expect to see some results that continue to justify all of this capital?
Well, look, I think for Meta, they called about, using their super intelligence labs where they have made some very big hires as being a source of innovation and, improvement in their models. But I think Meta is where ChatGPT was maybe 2 years back in terms of training the next version of their model and really, improvement that they have shown in the past 2 years. Meta is sort of doing that now. So from that perspective, I feel it's a leap of faith that investors have to take with Meta, likely spending $100 billion in capex next year. And when will that show up in revenue? I think it's going to be at least 12 months or even longer. So from that perspective, Google and Microsoft really will show accelerating cloud growth. And that is why you're seeing the sort of reaction with Google. Probably not so much with Microsoft because, valuation was already quite rich. But both Google and Microsoft had pretty solid cloud results in the quarter.
The other company we're watching, Mandeep, not a listed one just yet, OpenAI. Reuters reporting that it could file next year and then IPO the year after that. Yeah. $1 trillion as much as in valuation. I mean, these are whopping numbers. Does that make sense to you?
It does, because right now it feels like any company that has a lead when it comes to frontier models and, showing that in terms of user growth, in terms of engagement is what market is rewarding. So OpenAI still has a lead when it comes to the frontier LLMs. Their user growth is really exponential. And at this point of time, Meta and others are trying to catch up, but clearly OpenAI has that lead, and they are adding up to 26 gigawatt in capacity. That in itself, amounts to almost $1 trillion in spend through 2030. So from that perspective, they feel like they have a clear runway when it comes to how they plan to deploy this compute.
Bloomberg Intelligence Global Head of Research Mandeep Singh with the latest on all of those tech earnings. In fact, we talked about AI with SK Group Chairman Chey Tae-won. He acknowledged that there may be some froth in the AI space, but he downplayed its potential risks and impact on business. Chey, who also chairs the Korea Chamber of Commerce and Industry, shared insights on Seoul's AI strategy. He spoke to us exclusively on the sidelines of the APAC CEO Summit.
Well, of course, if you compare to U.S. or the China, so Korea is a much small stake, and we don't have that much resources to invest in or even AI side. So right now, AI is require large resources, too much maybe. So, and Korea side, and we could actually provide several solutions. One is the test bed. So our size is good for the test. So even there's a physical AI and the bio side and even the regulations, and we could be the really good the test bed for the AI. The other is about solution for the cost side. Right now, cost of the AI is too much. That's why people just saying that there's a lot of bubbles, and we expected a lot of bubble. But if you really try to understand that this is just early stage right now, even though there is some bubble, and I think that the whole technology and the market will be pick it up. Only challenge is we don't really provide a lot of the solution for the application yet.
So you do think that there is some bubble, or at least a little bit of a froth when it comes to the AI sector right now?
Yes, right.
What are some of the risks of that, and do you expect that froth to come down or the bubble to pop?
If you are in the players, then I don't really see that there was that much bubble. There is a lot of potential. Still, there is some danger because that we put it in a lot of money, end up, 5 to 10 years later. In the long run, if there is not enough outcome, then we have some trouble.
Is that a concern for SK Group? We understand that you do have a deal with Nvidia to get those chips as well.
Yes.
How big is the size of that deal at this point?
Right now, as a transition period to reasoning AI to the agentic AI. So when you enter into the agentic AI, so it's not the person to AI communications, it's just the agent to agent communication. So that requires that the huge size of the memory capacity in the future. So with that kind of reasoning, so I don't really think that there is not much risk on us.
So what do you think of the South Korean government's initiative right now to secure 200,000 GPUs by 2030? Does that pose a risk of just being overly ambitious?
I don't think so. So this government wants to using AI for everybody. So if that's the kind of case, and we need that kind of computing power. So anyhow, so even though the Korean market demand is not enough, and we could actually serve to the other nations' market too. That's how we actually invest with Amazon. That we make the AI data centers. We just announced it 100 megawatt type of initial stage for that the AI data centers. But
that was the announcement back in June. That was around $4 billion.
Yes.
There's another announcement this week that's another $5 billion investment. Is SK Group involved in that too?
The 1 gigawatt. So it's 10 times bigger than the $4 to $5 billion.
U.S. Trade Representative Greer was saying, as an example, that if a smartphone is made in South Korea but exported to Australia, they could face the threat of having to get Chinese approval if it contains even a trace amount of rare earths. Should the likes of SK and other Korean businesses prepare for that eventuality?
It's a matter of price. So if you pay a little more of the price, you can actually get into a lot of other sources from the rare earths. Even the U.S. has that you own the rare earths the programs, and I guess that there is a lot of rare earths in the other areas too. So I don't really think that that's going to be real weapon. So. But right now, it's a short term, the price matters.
SK Group Chairman Chey Tae-won speaking exclusively to Bloomberg. We have more ahead on the Asia trade. This is Bloomberg.
And the latest from the corporate front, Starbucks has posted positive same-store sales growth for the first time in over a year. Sales at established locations expanded by 1% in the company's fiscal fourth quarter. Same-store sales were driven by strength in international markets, which rose 3%. Sales in China rebounded while performance in the U.S. remained flat. Boeing took an almost $5 billion charge and delayed the debut of its 777X jet as the U.S. plane maker reported a wider third quarter loss than analysts had estimated. Shares tumbled the most since July. The latest write-down means Boeing has now recorded nearly $16 billion in charges on the 777X, which is running 7 years behind schedule amid tough regulatory scrutiny.
Shery, aside from these corporate developments, we're of course tracking the market reaction to the Federal Reserve Chief Jay Powell's pushback on a December rate cut. As some of our guests have been outlining, it's about optionality for the U.S. central banker. And for the moment, after the repricing we saw in the Treasuries curve with yields rising across the board from the 2s to the 10s and even further out, we are seeing that follow through in other developed markets, treasuries or bonds. Look at how Australia and New Zealand are faring. Of course, for Australia, that added complication because we did get CPI numbers that were harder than expected just a day ago, pushing back further the expectations of the RBA rate cuts. Take a look at how we're setting up for the session when it comes to Nikkei futures. Expected declines following on from what sounded like a less dovish Powell, and then a mixed bag for tech earnings and how much the investors are supportive of how these companies are spending on AI. ASX 200 also sinking about 0.4%. US stock market futures not giving us that much direction. Markets open next in Seoul and Tokyo. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens. And of course, aside from central bank developments, these Mag 7 earnings, we also have the Trump-Xi meeting set to take place today, Shery.
What a busy week, right, Avril? I mean, we are still watching for President Xi to arrive here in South Korea, his first visit in 11 years. And as you said, he's expected to meet with President Trump face-to-face for the first time since 2019. What will we get out of that conversation is key. Of course, we are expecting perhaps a temporary truce for now.
I think that is what markets can at most anticipate because we are seeing still these structural differences between the US and China. It seems quite hard that they can iron it out even this week when the leaders meet. For the moment, though, take a look at how Japanese stocks are starting the session on the back foot, following on the performance of Wall Street overnight. This followed on from Powell's pushback on the December rate cut, not a foregone conclusion, he says, but also worth highlighting what we got on QT, the end of it, and that is coming in earlier than some had been telegraphing. There's also deep divisions within the Fed, and then pile on what we got from some of the Mag 7 earnings. Meta, the reaction function post-earnings has been really negative. Maybe a bit of a different story when it comes to Alphabet. You're seeing the topics looking quite flat. Given the dollar bounce, dollar yen is moving towards the 153 handle, and of course we have the BOJ's Ueda-san today. The focus is going to be on whether he sets things up for a December rate hike. His job perhaps complicated given what the Federal Reserve has just unveiled today. Take a look as well at South Korea and how we are starting up on the session. Of course, when it comes to the moves in the dollar and yields, the South Korean Finance Ministry has been saying in a statement following the Fed meeting that it's continuing to monitor FX and financial markets closely. So that just underscores how this Fed commentary has been complicating things for other economies. We are still on the lookout for Samsung Electronics earnings, and it is expected to show that strength from the chip demand just a day after SK Hynix knocked things out of the park with record quarterly profits. Take a look at how we are faring on the treasuries. As the US 2 years, we did see that pullback across the curve to yields the highest level since early June, but you're seeing a bit of a reversal in the Asian session. Futures not giving us that much direction for the moment. But as we heard from Powell, December now a question mark. Have a listen.
We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
President Trump says he's looking forward to his meeting with China's Xi Jinping here in Korea as well in just a few hours. The leaders are expected to formalize a truce, putting the world's biggest trade fight on hold, at least for now. Our chief North Asia correspondent, Stephen Engel, joins us now from Busan, where the meeting is due to happen. Steve, are we actually quite sure that the meeting is happening in Busan? I mean, we were all so confused until last night. What are we expecting today?
Yeah, we did finally get a White House statement saying that this meeting between Xi Jinping and Donald Trump would likely happen here in Busan. In fact, we're at the gates. Just over the far left corner of my shoulder here is the entrance to the Republic of Korea 5th Marine Air Wing, the military side of Gimhae Airport, International Airport here in Busan. And we've been told that essentially this is where that Xi Jinping and Donald Trump will be having that meeting at 11 o'clock local. What time is it now? Well, it's just a little bit after 9, so in 2 hours' time. We have seen the satellite trucks from China Media Group, so we do know that Beijing's media presence is here, not necessarily confirming that it's going to happen here, but all indications, all anecdotal evidence is that this is where that long-awaited meeting is going to happen. And they do have a lot of issues to go through, as you've been discussing all morning and all day yesterday. Of course, we're seeing the framework agreement from that meeting in Malaysia coming to fruition here, where Donald Trump and Xi Jinping will be signing, or at least shaking a hand, formalizing many of the tenets of that framework agreement, including what the United States has been pushing for, and that is at least a pause by Beijing on their export controls on rare earths, critical minerals, magnets, and the like. Also, China is said to be also purchasing at least 2 cargoes of soybeans. That removes a politically hot-button issue in the Midwest for Donald Trump and his supporters and the farmers there. There also could be a signing of a TikTok deal that Donald Trump helped broker some buyers, American buyers and investors into TikTok. Whether Xi Jinping will indeed sign off on that is yet to be seen. No doubt fentanyl will be front and center as well in any kind of tariff relief that the United States might want to offer or has offered the Chinese, whether that 20% added tariff will be lowered to 10%, and what kind of hard and fast commitments will Xi Jinping make to try and crack down on the precursor trade that allegedly comes out of China. So again, it's a sensitive issue for the Chinese to address that fact that precursors come from China to the domestic media. That would be an interesting development. But again, what does China get for all of this? The big concession potentially Donald Trump mentioned yesterday, and that is they might make the Nvidia AI accelerators, the Blackwell chips, which are off limits right now to be sold to China. They could be made available. Maybe that pledge and promise has already been made. That would be a sizable concession. It's something that the CEO of Nvidia, Jensen Huang, has lobbied hard with the White House to make happen, because essentially Nvidia has zero business, according to Jensen Huang, right now in China. It was China that blocked the watered-down chip, the H20, to be imported into China. So Blackwell, the top-level chips, that would be quite a significant development.
Steve, what's also interesting is the backdrop for Trump as he's made his way through Asia while a U.S. government shutdown is underway. So perhaps this speaks to the importance of all these deals that he's inked out as he's traveled through the region. Yep. And one of the things that have been sorted out, which came as a sort of surprise, is that between the U.S. and South Korea, details on trade agreements. What do we know there?
Well, we thought this was going to be one of the more difficult trade deals, whereas Japan was signed and pretty much sealed and delivered. 15% flat rate on tariffs and a $550 billion investment pledge by the Japanese. And again, there was the meeting in Tokyo a couple of days ago with Takaichi-san, the new prime minister. So South Korea saw what happened there, and maybe that was an added impetus to get a similar kind of deal for South Korea, which had been in the works for a long time. But even the White House was kind of saying maybe it's not going to get sealed on this trip. But what we're hearing is the dinner last night, the two presidents, President Lee of South Korea and Donald Trump, essentially came to an agreement, and that is also lowering South Korea's tariff rate on South Korean exports to the United States from 25 to 15%, plus a $350 billion investment deal. $150 billion of that is going to be in shipbuilding. And as a side note to that as well, Donald Trump has agreed to revise the U.S. Nuclear Act. I don't know the exact name of that act, but it essentially will allow the selling of the nuclear-powered technology for South Korea to build its own nuclear-powered submarines. What we're hearing is potentially in a Philadelphia shipyard. So that's investment into the United States. It's also an advancement of South Korean military capabilities that President Lee says will take the burden off.
Right.
Of its own submarines. So again, it's all encompassing. It's come together pretty fast.
Yeah, several sectors, including shipbuilding. Our Bloomberg Chief North Asia correspondent Stephen Engel for us there. From ships, let's talk about chips, because we've just gotten Samsung Electronics earnings, third quarter net, beating estimates, coming in at 12.01 trillion won. This is versus the 9.29 trillion won estimate. We have chip sales also better than expected, 33.1 trillion won, and chip operating profit coming in at 7 trillion won. So maybe this speaks to the sense of Samsung being able to use its heft to compete with the likes of SK Hynix and Micron when it comes to high bandwidth memory. And maybe this also cements some of the expectations of strong AI demand. Let's check in on the market impact, bring in Bloomberg MLive strategist Mark Cranfield. So Mark, we're getting a slew of earnings in the past 24 hours from tech giants. Samsung's numbers also mirroring what we got from SK Hynix just a day ago. But I wonder, what is your take on how we're seeing the AI spend and playing out in CapEx and the tech names? Does that support valuations, not just what we're seeing in the US, but in Asia as well?
Supporting valuations is probably another story. But in terms of the AI theme, seems to be alive and well, even though there was a pretty mixed response to the big US names overnight. So they were priced for perfection. Going into this set of earnings, investors were expecting very big things. The market was at very high levels. And to some extent, there's been a little bit of disappointment on some of the outlook. Meta was the one that got hit the hardest. It's taking a bigger than expected charge on one particular area. But the underlying theme from all of them, Microsoft, Alphabet, Meta, what you're seeing today with Samsung, what we saw with SK Hynix, demand for AI-related products is extremely high going into 2026. It's the same kind of narrative you've been hearing from Nvidia and other people as well. So once the dust settles a bit, people will probably be reassured that this story has a long way to play out yet. And when you get a deal quicker than expected between the US and South Korea as well, it's likely we're going to see another brilliant day for the Kospi index. It's having a fantastic year. It looks as though it's going to have even further to go, because also it will take away some of the risk with the currency as well. The Korean won's been a little bit under pressure. This deal with the United States will probably help to stabilize that. From a foreign investor's point of view, it's really a win-win. They can see stability, possibly upside in the currency, plus these big Korean companies kicking it out of the park. It's a good time to be looking at Korea.
And by the way, Mark, did you know that there was a Fed rate decision as well? I mean, there's so many policy decisions at this point, and we're losing track with all of these news developments around AI.
Hey, I mean, we knew that Thursday was going to be the big day of the week, and it is just jam-packed. Don't forget, there's a Bank of Japan as well. And that's still to come, plus the meeting between Xi and Trump as well. the Fed decision, although there was a lot of focus on the pushback, Jerome Powell for the December meeting, don't forget that from today, Federal Reserve speakers are free to come out again in public, and you can expect the story from them will not be exactly the same as what we heard from Jerome Powell. There was dissent within the Federal Reserve. Some people wanted a bigger rate cut straight away, and there will be a lot of voices calling for that December interest rate cut to be firmly on the table. Odds have changed slightly. It's still a majority of traders expecting 25 basis points in December, but you can expect to hear some pretty dovish voices coming out of Fed speakers starting from tonight and over the next several days. And don't forget, we're still in the government shutdown. It's still continuing, and it is dampening the effect on the US economy. So although they're lacking data, which was a point made by the Fed last night, what we do know is that the longer the shutdown goes on, the worse it's going to be for the employment situation in the US, which is the key factor which has been driving rate cuts from the Fed all this while. So it won't be too surprising if we get traders repricing fully for a December cut, even though Jerome Powell pushed back against it last night.
And some of our guests have also been highlighting that for Powell, maybe it's just about optionality. I wondered, though, what you're seeing in the dollar. Is that something that has legs, this bounce that we're seeing, and how does it complicate things for Asia central banks?
It's got a lot to do with the Bank of Japan today. So we're in for a real whiplash session here because don't forget, the Bank of Japan decision comes out first. They're fully expected to do nothing, no change in interest rates. There'll be some changes to the outlook for GDP. It's quite possible that the initial reaction will be dollar yen goes higher. People will see that, they'll be disappointed. Positioning in the yen is not huge at the moment. We may well see new highs for this cycle in dollar yen first thing. But then we get the press conference a few hours later, and Scott Bessent has already made it clear he would like to see the Bank of Japan getting on with interest rate hikes. He's made that point again yesterday. He's talked about them being behind the curve again today. It wouldn't be too surprising if Governor Ueda uses the press conference as the opportunity to push for that rate hike in December. Then the yen may rebound again. It's going to be a very busy and choppy day for yen traders. Once the dust settles, we may well find that the dollar is a bit weaker than where it started the day. There's a lot going to happen in between the two.
Yeah, we could be headed for, as you say, more whiplash, and this will really be a test of Ueda-san's communications ability to the markets. Mark, always great to chat. Thank you. And life strategist Mark Cranfield. We have more ahead on the Asia trade. This is Bloomberg.
We're seeing gains across Asia with the Kospi again at record highs and extending those gains up 1%. We're following some of those automakers after the U.S. and South Korea reached a trade agreement. Of course, we saw some tweaks in the composition of the U.S. investment fund. We're also following Samsung, which third quarter net beat estimates coming in at 12 trillion won. We had already seen SK Hynix yesterday also performing very well with a 62% jump in profit as well. The Nikkei holding steady at the moment. We saw the Japanese yen strengthen in the overnight session. We had heard from Secretary Bessent talking to Japan's willingness to allow the BOJ policy space being key when it comes to the Japanese yen. We are expecting the Bank of Japan's rate decision today. Not much expected. The expectation by economists is for the BOJ to stay on hold, but we will be listening to Governor Ueda to see if he gives us any indication of a hike for December. Let's get you back now to the Barclays Asia Forum in Singapore, where Hasinda is standing by with our next guest. Has.
Hey, Shery, with us exclusively, Jaideep, Khanna, head of Asia Pacific at Barclays. Jaideep, good to have you with us because Shery is where the action is. We are keeping watch on, this U.S.-China trade deal. That could potentially be a game changer for Barclays. It's had a great run this year. That could give the impetus for a better one.
Yes, Haslinda. And first of all, thank you for joining us at the 19th Barclays Asia Forum. It's lovely to have you here again. You're right. There's all eyes on what's happening with the discussions between President Xi and President Trump. And if, as has been widely reported, and particularly by Bloomberg, the outcome is positive for the markets, then I do expect that the current risk-on trade that we've been seeing continues to develop. We've had a strong year in Asia Pacific. Our businesses continue to develop and grow, and this should give us further momentum. So, yeah, pretty excited.
You've been building the business in Asia. Where are the growth pockets right now? There's a lot of optimism about Japan, for instance. That seems to be key for a lot of the banks.
We have a very strong markets-oriented and investment banking business in Japan. We've been investing in that over the last 3 or 4 years, making even further investments in that business, and I'm pretty excited about what the opportunities lie ahead for that economy and particularly our business. The other big market, which a number of your guests and the markets have been talking about, is in India. That's where I'm based as well. So that's another market where we have plans to continue to invest in the platform, and then our investments in the region actually have been quite broad-based. We have a strong partnership in Australia with Barrenjoey. We are making investments there. The private banking business, which I've talked about last year, we are building a booking platform in Singapore. So there are several pockets of investment, but the two markets that we are particularly focused on are Japan, as you mentioned, and then, of course, India.
Planning to add headcount on the back of that optimism, and given, all the signals so far with the global economy?
We've been steadily adding resources, but it's very targeted. We like to earn our way as we go, rather than build it and they will come.
Targeted how? And what kind of numbers are you looking at?
They're not massive numbers, but we've added. I'd like to think about 10 colleagues in our cash equities business in Hong Kong, and there are further plans to add. Our business doesn't require very large numbers of people, but it certainly does require bringing in skills that we may not have or improving the quality of the talent that we have on the platform.
You touched on Barrenjoey earlier. Of course, you have a stake there, and the numbers have been great on the back of the bond market. I'm just wondering whether there's any appetite to increase your stake in Barrenjoey.
That's a strategic decision, but as I understand it, we are very happy with our current ownership in the joint venture. That's a great partnership. The firms get along really well, and we prosecute business together. But at this time, first of all, it's a strategic question. But at this point, I think we are very comfortable with the ownership that we have.
AI has been front and center for a lot of companies. The big question is the impact on your headcount. How are you looking at that?
So I'm going to step back a little bit. I've been in the industry 35 years. Every several years, there's a new technology. Well, I started when we didn't have computers yet, right? So I was on the floor when the first computers were introduced. Every few years, there's a technology that promises to radically reshape the industry and shrink it. Today, 35 years later, the industry has more talent, more capital, more resources, and is significantly bigger than it was when I started. So I do believe that AI will not fundamentally change that long-term trend. It'll change jobs. People will do different things. But I don't believe that the aggregate headcount in the industry is going to be massively reshaped. AI, one of our guests that will be speaking later today, talked about AI permeating everything that we do. It's going to be like air and water in his view. And I do concur and agree with that assessment. But hopefully air and water allows everything to grow much faster and doesn't really lead to shrinkage in anything.
Given the potential that you mentioned, I'm just wondering whether that justifies the kind of run-up we've seen in the likes of Nvidia, now a $5 trillion company.
I'm not sure I'm entirely qualified as lender to justify it.
There's just so much optimism.
It is a radical technology. I don't think anyone knows what is exactly the right number of investment. But Nvidia has a particularly important place in the ecosystem. So there are justifications for the optimism, but the particular level, that's very, very hard, certainly for me, to determine whether it's exactly right or not.
Even as we talk about the positive signs, there are risks. We saw how the Fed, pushed back on another rate cut in December. What's the biggest risk you see for your business here?
Well, in the short term, I mean, the outcome of today's events, Asia is largely an export-oriented economy. All Asian economies have a big reliance on exports. The aftermath of Liberation Day has not been as dire as people have predicted. But certainly, if today's events and news disappoints, I think that will have a short-term impact. I'm a big believer in secular trends, capital, and the economy of the Asian economies continue to grow, and I think 5 years, 10 years from now, Asia will continue to occupy a larger space of the global economy than it does today.
All right, Jaideep, good to have you with us.
Likewise. Thank you so much.
Khanna, head of Asia Pacific at Barclays. Shery, of course, as Jaideep said, it's all about that U.S.-China trade deal. It's the details that we're after.
Yeah, we'll be bringing you those live from Busan as well. Hazinda Amin there. We have much more ahead from the Barclays Asia Forum as well. We'll be speaking with top former central bank governors, including Philip Lowe and Haruhiko Kuroda, ahead of today's rate decision in Tokyo. Plus, former Fed Vice Chair Lael Brainerd joins us as we digest the Fed decision. And of course, Chair Powell downplaying the chances of another cut in December. We have more ahead on the Asia trade. This is Bloomberg. The South Korean market continues to extend its record rally, and we're watching South Korean automakers and that big pop after the U.S. and South Korea agreed on a trade deal. We're talking about $150 billion in shipbuilding in the U.S., investments by South Korea, including providing $200 billion in cash as part of that pledge, $20 billion only annually capped in investments in order not to upset the currency markets. But at this point, we are going to be awaiting for that auto tariff to come down from the 25% to the agreed 15%. We'll bring you all of the live coverage from APAC here in Gyeongju. We have more ahead on the Asia trade. This is Bloomberg.
We had a tremendous meeting today with South Korea. I think the meeting a lot was determined, very much determined, and we made our deal. We pretty much finalized a trade deal, and we discussed some other things having to do with national security, etc. And I think we came to a conclusion on a lot of very important items.
Take a look at how Korean assets are trading after that positive sentiment coming from that trade deal struck between the U.S. and South Korea. You can see the Kospi extending its record rally, and automakers gaining big today on expectations that that tariff of 25% will come down to 15%. Not to mention that we do have some other idiosyncratic earnings like Samsung third quarter net beating expectations, coming in at 12 trillion won. We already had SK Hynix reporting a 62% jump in profit as well. But let's talk a little bit about that trade deal after President Trump and South Korean President Lee Jae-myung finalized the agreement capping months of talks. Washington will cap tariffs on Korean goods, including cars, at 15%. Seoul will invest $150 billion in shipbuilding, plus another $200 billion for an investment pledge designed to look like something similar to that deal with Japan. This suggesting that Korea can use not only equity, but also loans and loan guarantees to fund the package, which is a key concession. Let's discuss the deal with our next guest, AmCham Korea Chairman and CEO James Kim. James, always great to see you. Give me your reaction first to this trade deal.
All right. Shery, it's always good to see you. I think that this was a fantastic APAC. First and foremost, the fact that we had President Trump was a real outstanding, development. Just a week ago, we were concerned he may not show up. He gave an amazing speech over an hour with a lot of passion, so that was very positive. But look at this win-win trade deal that just got consummated. America needs Korea, Korea needs the U.S., and the deal itself seems very fair. In fact, I had a reception last night with both Howard Lutnick, the Secretary of Commerce, and also J.K. Kim, the MOTI Minister. And as they walked into the reception, they were all smiles. I had a good chance to talk to them. And when I asked them, how are things going? They both said things are great.
How's the environment different from, say, back in July when we thought we had an agreement, but it wasn't necessarily finalized?
Well, I think that back in those days, there were a lot of things that should have been locked in. But now that other countries are doing something similar, this has become a lot more serious. And I think that we have to give both Secretary of Commerce Lednick and Multi-Minister Kim a lot of credit. In fact, at the speech yesterday, President Trump called the Multi-Minister Kim a tough negotiator. And that's a big tribute to what they did. In fact, Secretary of Commerce last night mentioned that the Korean delegation came to the U.S. so many times. It shows you that with their tenacity and their ability to negotiate, made this thing work.
What do AmCham businesses think going forward should be your focus as you now have this new trade deal?
Now that we have this new trade deal, I think it's time for American companies to really win in Korea. In fact, you and I talked about it before. I want to help make Korea a regional headquarters hub for multinational companies. Singapore has 5,000 of these multinational companies in Korea, right? We have 1,400 multinational companies in Hong Kong, 900 in Shanghai, less than 100 in Korea today. So that just shows you there's an opportunity for the Korean government to fix some challenges they have. Labor inflexibility, CEO risk, digital tax, all those things that Korea can fix, Korea can really use its momentum to win in the long term.
We're a few months into the President Lee Jae-myung administration. Yeah. Are you seeing the changes that businesses want?
I think that there are some things that he's doing a lot of things to help the business community. But we also have a few regulations that I think that we need President Lee Jae-myung to help address. And AmCham will be working very closely with the administration to hopefully resolve some of those things. That said, his administration has been very open, very transparent with us, and we have a lot of access into the Lee Jae-myung administration, which makes us very happy.
We have seen the government making AI a core item agenda for this APEC. In fact, they want to take the lead in sort of building up a framework and ecosystem, not only in South Korea, but sort of a governance framework for Asia as well. Do you see there are opportunities for AmCham companies to help in building this along with other partnerships?
You know, I think it's an excellent point. In fact, one of the highlights of my trip here was at the tech forum that we had. We had the AWS president, and we had SK and SK Telecom in presence. AWS has committed another $5 billion into South Korea. That shows you how committed they are. We also had the head of the White House AI team, led by Director Kratsios. And we had a big session yesterday talking about tech prosperity. So there was an MOE that was signed, right, with the MSIT, Secretary Ha. And I thought it was a fantastic MOU. Again, allows the two countries to work together to really make AI a successful partnership amongst the two countries and companies in both nations.
How quickly the mood can turn, right? Because only a month or so ago, we had the immigration raids in Georgia, and that really soured the relationship between Washington and Seoul. Are there any risks involved for companies doing business here in South Korea when the security alliance is strong, but then you never know with the uncertainties around the different economic angles and relationships between the two countries?
You know, when the raid occurred in Georgia, obviously no one in Korea was happy about it. But a week and a half after the raid occurred, Deputy Secretary Landau visited Korea. We hosted him for an hour and a half. And I thought he was truly terrific. He talked about how to make this an opportunity to fix the visa situation. In fact, last night, Secretary Lednick also talked about the visa situation. He said, now we have this trade deal. We're going to now get visas for all the Koreans and make it work. So I look at it as an opportunity. We had a blip, but now that foundation has become much, much stronger.
As we continue to see the relationship between Washington and its other allies like Japan and ASEAN countries improve, and also be in conversations with Beijing in order to improve that relationship. What does it mean for companies working in South Korea and the relationship between the two? Is this relative to other alliances and partnerships?
Absolutely. In fact, I think today's meeting between President Xi and President Trump would be very big. When the two countries, the two biggest countries, are actually having good conversations and are at peace, it makes everybody do a lot better. And as a former business guy myself, when you have some clarity, business people can win with that kind of clarity. But when there's uncertainty, it makes it very difficult. And as President Trump mentioned yesterday, the stock market is an all-time high. And I expect it to even go higher, as President Trump said. So I give President Trump a lot of credit for what he has done. And I just hope that all the countries that are in discussion with the U.S. can follow through with that ambition and make this a great place for business.
What will be your priorities for AmCham come next year as we head into 2026 with a better picture for trade?
You know, I just had a meeting with a deputy USTR representative, and one of the things we talked about is, hey, this deal sounds great, but now it's all about execution. We still have non-tariff barriers. We have issues with digital trade. We have some concerns here in South Korea. So now it's an opportunity for us to fix some of those things and make this a terrific place. And that's what we are focused on. Not with just words, but with action that we could really monitor.
James Kim, always good to see you.
Thank you.
This is AmCham Korea Chairman and CEO James Kim joining me here in Gyeongju at the APEC Summit. Now, here at APEC, I also spoke to SK Group Chairman Chey Tae-won, who acknowledged there may be some froth in the AI space, but he did downplay its potential risks and impact on business. Chey, who also chairs the Korea Chamber of Commerce and Industry, shared insights on Seoul's AI strategy. He spoke to us exclusively here. Take a listen.
Well, of course, if you compare to U.S. or the China, so Korea is a much small stake, and we don't have that much resources to invest in even AI side. So right now, AI is require large resources, too much maybe. So, and Korea side, and we could actually provide several solutions. One is the test bed. So our size is good for the test. So even there's a physical AIs and the bio side, and even the regulations, and we could be the really good the test bed for the AI. The other is about solution for the cost side. Right now, cost of the AI is too much. That's why people just saying that there's a lot of bubbles, and we expected a lot of bubble, but if you really try to understand that this is just early stage right now, even though there is some bubble, and I think that the whole technology and the market will be pick it up. Only challenge is we don't really provide a lot of the solution for the application yet.
So you do think that there is some bubble, or at least a little bit of a froth when it comes to the AI sector right now?
Yes, right.
What are some of the risks of that, and do you expect that froth to come down or the bubble to pop?
If you are in the players, then I don't really see that there was that much bubble. There is a lot of potential. Still, there is some danger, because that we put it in a lot of money, end up to, 5 to 10 years later. In the long run, well, if there is not enough outcome, then we have some trouble.
Is that a concern for SK Group? We understand that you do have a deal with Nvidia to get those chips as well.
Yes.
How big is the size of that deal at this point?
Right now, as a transition period to reasoning AI to the agentic AI. So when you enter into that agent AI, so it's not the person to AI communications, it's just agent to agent communication. So that requires that the huge size of the memory capacity in the future. So with that kind of reasoning, so I don't really think that there is not much risk on us.
So what do you think of the South Korean government's initiative right now to secure 200,000 GPUs by 2030? Does that pose a risk of just being overly ambitious?
I don't think so. So this government wants to using AI for everybody. So if that's the kind of case, and we need that kind of computing power. So anyhow, so even though the Korean market demand is not enough, and we could actually serve to the other nations' market too. Well, that's how we actually invest with Amazon. That we make the AI data centers. We just announced it, 100 megawatt type of initial stage for that. The AI data centers, but
that was the announcement back in June. That was around $4 billion.
Yes.
There's another announcement this week that's another $5 billion investment. Is SK Group involved in that too?
The 1 gigawatt, so it's 10 times bigger than the $4 to $5 billion.
U.S. Trade Representative Greer was saying, as an example, that if a smartphone is made in South Korea but exported to Australia, they could face the threat of having to get Chinese approval if it contains even a trace amount of rare earths. Should the likes of SK and other Korean businesses prepare for that eventuality?
It's a matter of price. So if you pay a little more the price, you can actually get a lot of other sources from the rare earths. Even U.S. has you own the rare earths the programs, and I guess that there is a lot of rare earths in the other areas too. So I don't really think that that's going to be real weapon. So. But right now, it's in a short term, the price matters.
SK Group Chairman Chey Tae-won speaking exclusively to Bloomberg. We do have an alert on more details on that trade deal between South Korea and the United States. Secretary of Commerce Lutnick now posting on X that President Trump had an exceptional meeting with South Korean President Lee, but he's also saying that semiconductor tariffs are not part of this deal. Remember, we had heard from the South Korean policy chief Kim Yong-bom saying that both sides had agreed to apply tariff levels on semiconductors that are not disadvantageous compared to those applied to Taiwan, which is the main competitor to Korean firms. So we'll have to get a little bit more details when it comes to the chip side of things, because there seems to be a little bit of disagreement on what tariff levels they would be applied, especially compared to Taiwan. We have more ahead on the Asia trade. This is Bloomberg. Busy day here in Gyeongju, South Korea, where we do have the APEC summit ongoing. President Xi Jinping expected to arrive here in South Korea for the first time in 11 years. President Trump and Xi expected to meet today. Also, we do have the Barclays Asia Forum in Singapore, and Hasinda Amin is standing by with our next guest, and has, of course, the trade relationship between the U.S. and China, one key focus of your conversations as well.
That's right, and the Fed, don't forget that we have the Fed that cut rates 25 basis points. Well, joining us exclusively, Thomas Nides, Vice Chair at Blackstone. Good to have you with us.
Thank you for having me.
We have trade, we have Fed. Let's start with the Fed. This is a Fed that's been under a lot of pressure to do a balancing act, 25 basis point cut, but he pushed back on December. How are you reading the move?
First of all, I don't think any of us actually really know. I mean, we felt pretty clear that this was going to be a cut, at least in this meeting, and we assumed there'll be a cut maybe in December. But listen, the Fed is trying to balance between employment and inflation. And I think to the date, they've done a pretty good job of trying to balance that. It's not easy. It's not simple. But I think as more data comes in, they'll have to evaluate what happens in the December meeting. But as far as we were, from a Blackstone's perspective, we predicted this to happen. Obviously, it's good for us. It's good for the business.
The Fed's cut rates with inflation at 3%, not 2, but 3%. So 3 is the new 2. Is that correct?
Yeah, listen, I'm not an economist, but listen, I think obviously what they are seeing in the employment numbers is a softening in unemployment. And I think that's their job as the Fed, is to balance this issue about employment. And you don't want to be too far behind the curve. And so what I think the Fed is trying to do it just enough to keep a lid on employment and not allow it to shoot up in inflation. I think so far, to date, they've done a pretty good job. But listen, the chairman's got a very difficult job trying to manage this, and so I do predict today that he's done a pretty good job.
Now, we talk about those trade deals which are being negotiated right now that has trickle effect into inflation. People say it is inflationary, right? And in the end, consumers are likely to pay for it. If you take a look at the U.S. economy, might that inflation be at 4% on the back of the tariffs, on the back of those trade deals?
Well, first of all, as John Gray, who runs our firm, has said, this is basically tariff diplomacy. Every day we're balancing out, and the president is trying to balance the needs to get better trade deals. And so we're right in the middle of this, okay? As you know, the president's in the middle of this meeting with President Xi. We'll see what comes out of that. There's a potential deal in South Korea. We'll see what comes out with that. So we are watching this in real time. The impact on consumers is yet to be seen. I mean, listen, we believe the economy is quite healthy. As you know, we own 270 portfolio companies. We just announced our earnings this week. We had great earnings. We had $50 billion of inflows of new money. We have probably $200 billion of dry powder. We feel really good about where we are today economically. And as you know, because you reported, the IPO market is open. So we're seeing a bunch of realizations. We saw that at Blackstone this quarter, a bunch of IPOs. We think fairly good in the fourth quarter as well. So we see the combination of our portfolio companies doing quite well, inflows coming in quite nicely. So the combination of that would suggest the economy is still quite healthy.
And you're excited about Asia as well, India in particular.
We are, as you probably know, one of the largest, if not the largest, private equity investor in India. We've been bullish on India for a long, long time. We are actually
ramping up, Tom?
Oh, without question. We have a huge team, not only the people on the ground, but our investment thesis is what we invest in between hard assets and logistics and variety of different activities that we're doing in India. It's a fantastic investment thesis for us. We've been there for a long time. We're celebrating about our 20th anniversary in Asia. So Blackstone's been in this region for a long time. This is my third trip to Singapore this year. I know John Gray is coming next week. Steve Schwarzman was just in Japan and China and India. So we are all over Asia. We care about it. We think it's the right place to be, and it's a great investment thesis.
All excited about the private market, and the conversation around the private market is actually private credit. Those cockroaches, where do you weigh? I mean, the likes of HSBC now putting aside hundreds of billions and millions of dollars just in case.
Well, first of all, you got to remember where we are. So Blackstone has been in the private credit business for 20 years. We've had virtually zero losses in that period of time, okay? We are fundamentally a big believer in the private credit market. And the reason why people keep giving us capital, they understand both the thesis of what we want in private credit, which is long-term returns. And as you know, has performed better than the liquid markets. People understand that. And it's about the underwriting. And not to be that guy, those deals that you talk about, those were bank-led. I mean, again, not to be that person. But the reality of this is the private credit market, if you underwrite correctly, which we do, as we focus as we do for the long term, and the insurance companies that are giving us capital understand who we are as a firm.
It is opaque. It's an opaque market. It is illiquid. And we have the likes of Andrew Bailey saying, I'm going to stress test. That must say a lot.
Sure. Well, as you know, even during the financial crisis, we had virtually no losses in our private credit business, okay? So again, I would only stress, we've been in this business for a long, long time. We care deeply about this business and why our clients are, obviously sending us money to invest in the private credit business. So we believe in it. We think it's important. We'll be doing it 20 years from now as we were 20 years ago. So again, the market's a great market. Investors understand it.
I want to talk about geopolitics. It is a shifting dynamic at this point in time. How are you seeing what's happening right now? Is a decoupling between the U.S. and China eventually inevitable?
I don't think so. Listen, as we know, this is our most important competitor economically and militarily. China's not going anywhere, nor are we, okay? These two countries, doesn't matter if it's Donald Trump was president or Joe Biden or Barack Obama, we're going to have to deal with the Chinese. And I like to harken back to our founder, Steve Schwarzman, who started the Schwarzman Scholarship in China. He understood that, 12 years ago when he started the school there, that the importance between these two countries and students and young people understanding the importance. Do we have some bumps and some disagreements? Without question. But the reality is that is a very important market. We're a very important market for them, and likewise, and we're going to have to deal with each other in an effective and constructive way.
And it will start with that trade deal today. Tom, thank you. Thomas Nides, Vice Chair at Blackstone. There you have it. Handing back to you, Avril.
Yeah, let's hope we see that trade deal later today between the US and China. How's Linda Armin there for us with that interview? We have more ahead on the Asian trade. This is Bloomberg. As we continue getting details of the US's trade deals with Asian partners, the likes of Commerce Secretary Howard Lutnick saying that tariffs for chips are not part of the South Korea trade deal. Of course, this has been a contentious issue, but look at the way that some of these chip-related stocks are performing. Samsung blowout results following on from what we saw from SK Hynix just a day ago to some. This speaks of the capability of Korea to really lead the Asia AI boom. We're watching the China Open as well ahead of the Trump Xi meeting. Keep it here with us. This is Bloomberg.